Hey there, this is David Cox, Senior Portfolio Manager at Financially in Sync at Raymond James in Waterloo, Ontario, Canada. Today on the webinar, it is Where Do We Investors Stand? It is Friday, April the 25th, 2025. Let's get started. Let's sort off by week as we always do. Bitcoin up at the top of the list. Stocks in general, growth, everything bounced back here. We've gone from risk off to risk on, but it is in the context of a downtrend. Let's take a look here. You can see here's the main stock indices through here. Short, intermediate, long-term trend down. We'll take, of course, a lot more look at this. Please, a reminder, pause your video player at any time here to dig in for more details. So look again here, this same chart we looked at a couple of weeks ago on the left side. We bounced off of that support from the highs from the 21-22 peak there of the S&P 500. On the right side here, you can see this is where that Thursday kind of crash, post Trump's comments, the real trade war, tariff war started. And you can see the stocks kind of came down, and you can see yesterday they've come all the way back up here. So they're right back into this line here, which I've drawn, which is really what I'll call the breakdown point. So again, market is stretched on the short term, I would without question say, and this is without question, lower highs and lower lows. So we need to keep that in context as we look around. You can see on a market breadth standpoint, middle panel shows stocks percentage of 50-day, only 32%. And again, similar for the stocks over the 200-day average. 33% is not a high number. That means most stocks are falling. And that is, again, a sign of caution without question. There are some stocks that are great, and there are many stocks that are not. And there are many stocks that have bounced strongly in the last week, but that does not make them in the context of an uptrend. We always must know the difference. Now, here are three measures of essentially what we'll call risk off, and they're all signaling now risk on. They've all turned lower here. So this is bonds versus stocks in the short term. Staples, consumer staples tend to be a defensive sector, turning lower, and volatility also after that big spike has turned lower. Also look here, I got a dank buy signal. This is an ETF I follow in Canada, and again, I kind of developed and used it as a market timing model. You can see I've drawn vertical lines here when the model turns itself up, meaning the outperformance starts to come from that long short fund. And you can see what happens in the S&P 500 is that it's actually tended to proceed downtrends, not downtrends, but pullbacks at the very least. So from that perspective, it's just turned lower, meaning we've started to outperform on the broad stock market, which is actually a positive. So that's an equity buy signal. I want us to always remember we need to step back and zoom out here. And so this is, again, the 1, 2, 3, 4, 5, and 10-year time frames of some of the big assets. I've highlighted 4. Again, I'm not trying to point out the 40,000+% in Bitcoin, but really what I want you to actually look at is the gold area, which is the second line. On a 10-year basis, we actually have gold outperforming the S&P 500. That is definitely not going to be what I'll call common knowledge. I think people are talking about it now, but remember, we put things into our portfolio because we want to diversify. We want to increase the risk-adjusted rewards. And I think we always want to be open-minded. There are things that we are all close-minded about, right? We have our own biases. We have our own, whether it's domestic bias in a stock portfolio, whether it's the way we spend money, we all have biases, right? And so we want to always remember that, again, in the short term, in the day-to-day, there's so many headlines, so many market movements. And again, anyone paying attention to their finances and portfolio in too short a time frame can actually miss the big picture. And again, I would call it very unhealthy. But again, I think this data, there's a lot here to see. So again, just take a pause and look through it at your own leisure. On the left side here, gold has been, as we know, very strong over the long term. This is a daily chart of all things. Here I am zooming in so much. Now, we had a big reversal the other day, but that's nothing more than short-term profit taking. This looks like an uptrend to me. It is on the monthly basis. It is on the weekly and the daily. Gold stocks on the right side have been very, very strong as well this year. Now, gold stocks, bigger picture, have been actually very, very weak relative to bullion. So again, not been a great place, but they're very strong this year. And again, so that is in an uptrend, right? So again, I've got the RSI 5 plotted in the bottom. I like to buy dips in an uptrend. And again, especially a volatile area, certainly don't want to get caught chasing and buying into relative strength, in my opinion. From a global stock perspective, there are lots of indices that are happening, and there's Poland up at the top of the list, up 41%. That's the lowest quartile there on the bottom. Those are the weakest markets year to date. You can see both the main U.S. indices are in that section. You can also, I'll tell you, Toronto is not shown here, but again, just for the Canadians, third quartile performance as well. Very, 0% return. That's not good, but again, it's a lot better than the U.S. for sure. But at the same time, again, we've got to remember to zoom out, right? There's lots of action going on here in the short term, but what does it all mean? Communication sector has been very strong. So let's take a look at small and sync kind of exposures here. So the communication sector, relatively strong on its own. Here's 3 names. Netflix, one of the largest stocks in the world, making all-time highs here this week in the face of earnings. That's very, very positive. There are very few stocks that are at all-time highs right now, so this is beating the market to highs, and this is, again, absolute strength, relative strength. That's very, very good. T-Mobile, also in an uptrend, higher highs, higher lows, and then Spotify. I'm sure some of you have subscriptions. Again, just a stock that is obviously, a part of what is going on today in media and from a social media standpoint and entertainment standpoint. Take a look also at the financial sector. Lots of strength within financials. Definitely like what's going on in financials. On the left side, we've got Fairfax Financial in Toronto. And just for the record here, just to kind of change things up. In the bottom panel, we've actually got the versus Toronto now, because again, Toronto has been stronger this year. So let's again compare ourselves to Toronto when we look at some of these stocks for a change. In the middle panel, we've got W.R. Berkley, one of the many insurance companies. And then on the Intact Financial on the right side, we've also got a Canadian insurance company. You can see these are all uptrends. And so even though there's been a lot of noise, there's been a lot of volatility, there's been a lot of downside, you can see very clearly it certainly has not seemed to have affected these stocks that I'm showing. Let's take a look at financials in more detail. Let's go overseas here to the European financials. I have talked about these several weeks ago. These have been very strong. In fact, on the left side, you can see here, we've gone up and we've made all-time highs here. Sorry, that might not be all-time highs, but either way, highs, and that is very, very strong. And then on the right side, the reason I've got a red circle in here on the daily chart is that is the day actually when the selling started in the U.S. and the kind of mini crash started on the Thursday. And so from that perspective, that's actually a day our clients push sell, again, just as a way of kind of preemptively sidestepping or trying to sidestep some risk. It did work well for a few days, as you can see. And then lo and behold, we've got what we call a V bottom, and we've gone up the highs. This is the problem with timing. This is the problem with risk management. You know, again, if stocks are always going to go up, it's true. You don't need risk management, right? But I don't subscribe to the belief that stocks always do go up. There are certainly stocks that don't go up, and there are certainly stocks that go down for long, long time periods, far beyond what our imaginations would let us have to believe there, I guess. So from the perspective of financials, very, very strong area, right? Outperforming U.S. financials, outperforming the U.S. market, outperforming the European market. At the same time, a V bottom in a market like this, in this context, again, I'm going to sit here and just continue to keep these on the watch list. I'm sure we'll talk about them again, but I am not someone who is interested in chasing at these levels. Technology has been very weak, but if we really zoom out here, again, I don't want us to get caught up, right? Technology has been weak for the past year. That's true. There's Broadcom on the left. This is a monthly, really beastly stock, right? Very strong outperformance, semiconductor AI stock. There's NVIDIA, of course, one of the largest stocks in the world. In the middle panel, it is in a downtrend if we zoom in, but if we zoom out here, I think we have to agree that it doesn't look that bad, actually. And then on the right side, ServiceNow just reported earnings yesterday and had a pretty strong move. And so again, that looks pretty bullish. That's a more recent breakout. So again, remember that even though something can be, you can put a broad brush on something and talk about technology or financials or the U.S. market for that matter, there are always opportunities in and around. Let's finish off with Sector Watch. Let's look at here's the technology stocks up at the top of the list, and on the bottom, we've got gold stocks in a short-term pullback, but in a broad, short, intermediate, long-term uptrend. I covered lots. I hope you could take some of it in, and please follow me on X. I'm at David Cox RJ. Thanks again for your time this week. This has been David Cox, Portfolio Manager at Financially in Sync in Waterloo, Canada.